Welcome back. A lot of Wall Street pros are staying bullish on stocks despite red-hot inflation and rising interest rates. One reason for that optimism is the still solid financial health of many households, as seen in a few charts from Truist Keith Lerner. In the first chart, you can see U.S. credit card balances have continued to trend lower from the great financial crisis. And then in the second chart we have here, higher wages and a higher stock market have allowed households to stay in debt reduction mode. Julie, it's interesting to see these charts because they, of course, come at a time where inflation continues to nip away at so many household budgets. And it's not just normal inflation. You're seeing food go up significantly, clothing prices go up significantly, but interesting charts nonetheless.
Well, if a lot of people in the U.S. are employed, if they're making more money, although on an inflation-adjusted basis, they're not doing as well. But if they have jobs, then they're not having to work down that savings, right, in order to pay for stuff. So that perhaps is why we're seeing those household balance sheets hold up relatively well. I guess the question is, how long does that balance continue, right? As we see inflation continue to work its way upward, will people have to start breaking into their savings in order to pay for stuff? But I guess we're not at that threshold quite yet, or at least not enough to see a difference on that household savings chart, Sozzi.
Yeah, I suspect we will get to that point, Julie. And one way we would be able to tell, of course, is through the prism of the stock market. If consumers are out there putting basic purchases of inflationary goods on their credit cards, that is a major red flag to the economy.